Hi, I am Anna. I come from www.ntvforex.com. The US-China trade war and the pandemic have screwed up the data analysis. http ntvforex.com News ID 449C2B8192020 12:55:54 p.m. Outlook Tigers and Stripes. Traders feel compelled to look at inflation numbers and speculate about how central banks will deal with changes in inflation, or at least how they may change their words. We agree semantics count, but it seems obvious that central banks are in such a deep hole that trying to climb out would bring down the walls and bury them. The UK just reported inflation higher than forecast, and so naturally traders now say the bow will probably drop. Talk of negative rates or any other more dovish thing. But remember that managing unemployment is also a central bank goal, not just inflation. We would not be surprised to hear someone in office come right out and say so. Along the same lines, traders plan to parse the Fed minutes later today for any clue that the Fed might change its ideas on how to respond to inflation, perhaps going for an average rate or some other such variation. Speculation like this is spitting in the ocean. Central banks, especially the Fed, have far more important things to worry about than inflation data. Besides, the US-China trade war and the pandemic have screwed up the data to the point where we don't really have a good grip on it, anyway. NBSP. This is not to say traders will neglect to respond to data or central bank statements, just that inflation is not central today and responses should have only a fleeting effect. We have already had several Fed govs say the second stimulus is what is needed and would be far more useful than any act by the central bank, meaning the ball is in Congress' court and EDA's stumbling and fumbling, although the Fed are too polite to say it quite that way. The other items on the table today more worthy of contemplation is the wild and woolly German auction of a 1.5 billion of 30-year bonds earlier today, which attracted a 3.6 billion in bids despite the yield of 0.50%, meaning the investor pays the government for the privilege of holding his money. Never has there been a clearer sign that an asset is safe. And remember what we have been saying about a safe and liquid. If a global sell-off in bonds is what has been happening, it may be ending. The FT notes that a sub-zero yields are nothing new for Germania's debt market, but the government has sometimes struggled to find investors to fork out at large auctions of new bonds. A 30-year debt sale a year ago, the first which offered debt with no regular interest payments, attracted bids for less than half the A2BN on offer. Again, we confess not to understand bond markets, and this one auction could be an aberration, but we might also interpret demand for negative yielding paper as acceptance of reality. Our recessions are deflationary and capitulation to a lousy outlook for many months or years to come. At the same time, despite the European bourses considering undervalued compared to US equities, equities really are risky when we can't see light at the end of the pandemic tunnel. The cohort of scaredy cat conservative investors just got bigger. Might we expect something similar in the US if and when equities slump again? No less an expert than Jeffrey Gundlach expects a replay of the March stock market rout. Gundlach is a classic self-important, self-regarding jerk and a guy who predicts Trump will win in November, but he has been right about many things, so we need to heed him. US yields can remain low as long as the Fed keeps buying the issuance, and can go lower if investors shift from equities back into fixed income. What Gundlach doesn't say is that the Fed's awful, scary balance sheet can get less awful and scary if investors return to fixed income, whether on a rotation out of equities or any other reason. That raises the question of what happens to the dollar if and when the S&P undergoes a big profit-taking binge that results in a correction lasting longer than this one and perhaps turning into a multi-phase drop. Presumably that is a shock that engenders risk aversion and drives money to the dollar. NBSP confused, join the club. And here we are again, seeing the S&P as the driver of the world's perception of risk and economic outcomes. We may not recognize or acknowledge it, but we are hanging on to the cliff edge by our fingernails. That is not to predict catastrophe, but to say ignoring the probability of catastrophe is really quite stupid. Tidbits: the Postmaster General chickened out in the face of massive protests against hobbling the post office, not to mention those 20 state subpoenas, and will postpone his cost-saving and vote invalidating reforms until after the election. Now the public and politicians alike are on his case to restore the mailboxes and sorting machines in time for early mail-in voting, which starts in 3 weeks. This is one of Trump's biggest political errors. He should have read the polls. 91% of all Americans like the post office. For what it's worth, the Republican-dominated Senate completed its investigation into the Trump campaign's association with Russia and acceptance of Russia's help, and found the campaign was indeed guilty. This is a way to lay all the blame on Manafort and other colluders like Stone, and likely delay pardons. The Hill newsletter reported Senate Intelligence Committee Chairman Rubio said no probe into this matter has been more exhaustive. Said Acting Senate Intelligence Committee Chairman Marco Rubio RFLA in a statement. Committee member Dem Warner said they found a breathtaking level of contacts between Trump officials and Russian government operatives that is a very real counterintelligence threat to our elections. The Hill concludes the committee's findings are a more in-depth look at the interference than Mueller's investigation, but the findings run parallel to the conclusions of Mueller's probe, which found overwhelming evidence of Russia's efforts to interfere in the election through disinformation and cyber campaigns, but a lack of sufficient evidence that the Trump campaign conspired with the Kremlin to impact the outcome of the 2016 election. Trump is guilty whether he knew about Manafort or not. Knowing and not stopping it is treason. Not knowing means dereliction of duty. Finally, the polls keep rolling in and they all say the same thing. Those who take polls favor Biden over Trump. The FTA's survey of polls gets 50.5% for Biden and 42.0% for Trump. The 538.com survey of polls gets 51.2% for Biden and 42.8% for Trump. Even so, it still all depends on who shows up to vote. An FT article says the young, including those voting for the first time, are not going to show up. Even those who prefer Biden or lean Biden say Trump was bad for their lives, but Biden is a return to normal and that was not so hot, either. NBSP This is an excerpt from the Rockefeller Morning Briefing which is far larger, about 10 pages. The briefing has been published every day for over 25 years and represents experienced analysis and insight. The report offers deep background and is not intended to guide FX trading. Rockefeller produces other reports in spot and futures for trading purposes. To get a 2-week trial of the full reports plus trader's advice for only $3.95. Click here. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.